if y'all are about ready, we can probably get started here just to get things moving. Ashlyn, does that sound right to you? Should we go ahead and get trucking on this deal? Okay. All right, y'all. So I'm Jacob Turpen. I'm going to come talk to you about misconceptions of business insurance and setting up your business for success. Whenever you go in to purchase your business owner's policy or just starting to think about it, you probably have an idea of how insurance should work in your head. And commonly we see that these ideas that people come to us with in their head are wrong. And so we spend a lot of time with clients that are already knee-deep in situations, and we're having to backtrack at that point. So if they would have come to us with some of these things that we're going to talk about today already understood, then they would have had a lot simpler process when it actually came to purchasing the insurance and they made it to the insurance agent. So this is all preventative measures so that when you go to buy all your insurance, you have the smoothest process possible. So I did draft an agenda for the class, and I'm going to give an introduction. We're going to go over, obviously, some common misconceptions. We're going to drive home the importance of proper coverage, go over the steps to set your business up for success, and then we're going to have some time for some Q&As if you guys want to talk about anything. First off, who are we? So I'm Jacob. I obviously own Turpen and Associates. It's an insurance agency here in Lubbock. We're a property and casualty agency. I am a third generation insurance agent. This is my dad, John Turpen, in the front row, second generation, and then we've got some grandparents. I've got some grandparents, and he's got some parents that were our first generation of agents. And so they're all from Plainview. I knew early on that I wanted to be in Lubbock, and so when I graduated high school in 2015 from PHS, I went to, I did a year at Wayland in Plainview, and then I came to Texas Tech, studied with Ashlyn in the financial planning department, ended up graduating from there. And in the meantime, I had already started my agency here in Lubbock, and I just kind of moved into more of a full-time position than I was doing it with school combined. We focus a lot on commercial and personal lines. We don't do a whole lot of life and health insurance. We're mostly property and casualty agents. We do mess around a little bit with some life products, but really we stick to the P&C world. And that's pretty much all that I think that I have about us. Moving on to misconceptions and misunderstandings. So my first slide is just simply that insurance is widely misunderstood, and that kind of goes back to our first talk, saying that I have a lot of clients that come into our office with these misconceptions prefabricated in their head when they show up, and backtracking these is sometimes restructuring businesses or retitling things or selling property that shouldn't be owned from the beginning. You know, there's all kinds of scenarios that you may be trying to get your client to do as an agent just because it's going to make their life a mess when it goes to the insurance side. And insurance is interesting because of the how wide in range the cost can be. So you have specific industries where insurance is their main expense. And trucking is a huge one, where if you ask a truck driver what his highest bill is every month, most of the time he's going to tell you it's his insurance. And with that being said, these guys are spending, you know, the average is probably $12,000 to $15,000 per semi to insure a semi every year, you know. So that's what you spend total per year. So you divide it out by 12 if you're making payments on it. But these truckers, if they're spending $15,000 per semi and they've got 10 semis, it's easy to find deviances where you could save 10 grand, which is huge. You know, that 10 grand would go directly back to the trucker, and it could change his whole outlook on gross profit for that year. You know, it could have turned a really bad year into a potentially good year just by having your ducks in a row when it comes to setting up your business so that you can have the cheapest insurance possible. Why is insurance misunderstood? Well, mostly because it's complicated. It's a very, very complex contract, and people typically don't read the contract. It's something that gets ignored. You typically look at the face of the policy, which is your declarations page, and it shows a brief overview of your coverages. And then the real meat of what is specialized product where they've added in tailored coverages for your specific needs. But in most of these scenarios, people are deviating from the contract to restrict your coverage, to keep you from having as broad of a policy. They're going to add in things like a cosmetic damage exclusion, which is what we just talked about, you know, where if your building gets hit with a hailstorm, before we're going to pay any coverage on it, you have to show us where, yeah, it might look ugly, but I need to see where it is structural damage to the building at that point. And you have some carriers that don't offer that. You have carriers that will pick and choose whether you have a metal building or a brick building, whether they're going to give you the cosmetic damage exclusion or not, because metal buildings are so susceptible to cosmetic damage. They can take a hailstorm, they'll look rough, but they don't leak necessarily. You know, you can run it. So does the insurance company owe you money? And all of these things are not to start trying to teach you to look out for cosmetic damage exclusions, but just say that it's different everywhere. There's so many different aspects to insurance and so many different ways it can and can't go, and carriers also do it differently. We also have a really interesting time in insurance where our tenured professionals are reaching their retirement ages, and there's a big passing of the torch in the insurance industry right now. Young professionals are completely uninterested in the industry, and typically insurance professionals fall into the industry. They don't necessarily seek out the industry. You know, I bet the two people, I don't know, did you fall into it or did you seek it out?
Fell feet first.
Feet first. Fell into it. I know my dad tried his hardest to stay away from it. I was weird. I just saw it as being a decent idea. I watched him fumble around trying not to do it for so long that I was like, man, it's the only thing that worked. Really, I guess I better do it. And so I enjoy it, but I see amongst my peers and people my age that I'm pretty alone in that situation, and that the people that are coming into the industry aren't following in their family's footsteps, so they haven't had all these years of experience to hear all the problems. So you're getting agents that have no background in this stuff, that need 20 years before they even come partially fluent in this arena. You know, you need people to have a ton of experience, and it's all going away. It seems like everybody's selling out to bigger conglomerates. You see your agencies being sold off to corporate partners most of the times whenever these people are reaching their retirement ages, hiring young people and not really training. There's no real formalized training processes going on or anything like that. So kind of an overview of why insurance is misunderstood. Moving into misconceptions. So misconception one is that all policies are the same, which is as broad of a statement as you want to make it and as narrow of a statement as you want to make it. All policies are the same, meaning that I have had some people literally just assume that insurance is insurance, and that you buy the insurance and that was the insurance and now you're done, you know. And of course, we know that, you know, that's not true. You have multiple policy types, you know, just from going commercial to personal, you know that there's got to be a division there, but then there's subcategories underneath the commercial and personal. So there's many policy types, as Dan talked about this morning. We're not even going to dive into this as much as it is just a list of there being many different insurance policies that you can choose from. They all do different things. They all cover separate scenarios. They don't crisscross very much, and if they do, it's for a reason. We do see people get confused on the commercial side more than the personal side. Obviously, people know they have their car insurance and their house insurance, but the general liability, people often get confused and wonder if they're not covered liability while they're driving their business vehicles, if it's general liability, you know, and the answer is no, obviously. You need your commercial auto. And all of these different policies, like I said, are very unique and cover very separate situations. Misconception 2, I'm fully covered. So full coverage is a terrible term, but it's a term that you hear in the insurance industry a lot. Full coverage is a misconception in of itself, because there's no such thing as full coverage. If you ever have been told that you have full coverage, it's not true, because there was an exclusion somewhere that you could lean up against in a certain situation where you would not have coverage. I guarantee you that no matter the policy, there is an area where it is not covered. You know, if you're breaking the law, some carriers limit coverages if you're committing felonies, you know, and things like that. So automatically that's going to be a place where you're not fully covered. So the misconception being that I'm fully covered, and then we dive into that a little more. In the commercial realm, in commercial general liability, automatically general liability, you imagine that it should be covering you for your work. You're an electrician, you're out wiring buildings, and so my general liability should obviously cover me for the work that I'm doing being an electrician. And really the base level general liability policy is simply referred to as premises liability, where it doesn't really do that at all. What it's really designed to do is come in and pay slip and fall incidents. You guys come onto my premises here and y'all are you trip over the ledging entering the door and we have a slip and fall incident. But these policies have your work exclusions very commonly, which is interesting. So you'll buy general liability for your business and it'll say, yes, you have general liability on the declarations page on that first piece of paper. But then you flick back into the 100-page document and eventually you'll see something called a your work exclusion, which literally goes in and excludes damages caused arising out of the work that you do. So you literally have coverage for if you have some kind of a slip and fall incident, and that very few things outside of that will actually come into play. These policies actually exclude coverage for your client's property that you have in your possession. If you're working on somebody's equipment too, like if you're an electrician and you're wiring a building and you have tens of twenties of thousands of dollars in materials that you're installing in this building and you damage your work, if you cause damage to the work that you're doing, totally excluded on base level general liability policies. It'll pretend like it, you can read the declarations page and formulate an idea in your head that it's covered, but once you start actually digging into the policy, the coverage does not exist. And you see that, and I've put in parentheses there, voluntary property damage. So this is a coverage that does not come standard on general liability insurance. What voluntary property damage does is it says, I'm an electrician, let's keep going back to that. I'm wiring somebody's house. I'm in the attic and I accidentally step through the roof. I miss a beam and I step through drywall and I cause damage. And general liability in its base form would force you to prove negligence. We would need to all of a sudden start deciding if you're actually legally responsible to pay that bill. And it would require you to determine that before it pays the claim. But you can add these coverages like voluntary property damage, which will go in and pay without requiring you to be deemed liable. It'll say, hey, we know there's an accident, there's been an accident. We don't really care who's at fault. Like we just see that you've damaged, you've been involved in the damaging of someone's property. It's low limit. It's never going to reach that $1 million that you see on the declarations page, but you might be able to get, 25, 50. I've seen $100,000 voluntary property damage limits added on to general liability policies. And that gets you some more freedom. If you ever have a small accident, if you ever have something where maybe it doesn't necessarily mean that you all need to go to the courtroom and sue each other, but you cause $30,000 worth of damage to somebody's property while you're performing a job and you want to reimburse them, obviously, and you don't have the money to do that. Contractors' errors and omissions. Things that you, as a contractor, you're constantly giving advice to your clients as to what they should do with their property. And if you set a person up with a plumbing system that inevitably is a failure, if it has an engineering flaw somewhere in the process, your work is excluded. The damage to your work, all of this, your work exclusions come into play. So then you would need contractors' errors and omissions, just like an insurance agent almost, or a doctor, where you're covered for the overall design and advice that you gave before going into the project, And so many things that do not come standard on general liability insurance that you would assume automatically you'd be covered for. If I go buy the cheapest general liability policy I have, and I'm a plumber, and I break someone's toilet while I'm repairing it, My GL should cover me. That's the basic thought of insurance, but it does not do it. It does not do it. You have to have heavier optioned insurance in order to receive coverages like that. Let me check my notes real quick. I did take some notes just to make sure I don't roll through this. What do you got? Yeah, some discourse.
If you broke that toilet while you were putting it in, and it's obviously not going to pay for the toilet, what is it going to pay for in that instance?
Damages to the actual house that you would not have control over, that are outside of your work.
What if that water spilled out on the floor and ruined the
Right. The floor, you're obviously not rebuilding the floor. So if vicariously the floor was damaged, it's not a part of your operations, we'll pay for the floor. No toilet. Or in the idea with the plumbing deal, if the plumbing system had a huge engineering fault, they would not pay to have the house replumbed, but the insured may get some coverage for their drywall and things that had issues during the time.
So like things that were damaged because of the plumbing?
Yep, you could probably find some coverage for those because you're legally responsible. But they're going to go in and they're going to exclude your work. So the guy's drywall work that you messed up, that's probably okay. It's just the stuff that you're working on, So if you have, like I said, if you fully designed a plumbing system, installed it, and something happens to it, you're not going to get anything for that plumbing system that you installed. Or HVAC people, they commonly install new package units. They're installing those big air handlers and things like that. They set a big air handler up on the roof, and then it goes cloom, cloom, cloom starts falling through the ceiling. Like the damages that it causes on the way down, you could probably find some coverage for. The handler itself, you're definitely not going to find any coverage for. And then you're going to have to be determined legally negligent in order for a base GL policy to pay. Unless you have the voluntary property damage, it won't just say, we see there's damage. What if it wasn't your fault that the package unit fell through the ceiling? So we could have a situation where air conditioner repairman followed all of the proper procedures, set the package unit on the roof, and there was rotted decking underneath the roofing system. And so then it starts falling through the roof because the deck is rotted. So was that necessarily the air conditioning repairman's fault that all of that fell apart? No. So his base GL might want to fight that instead. It might not say no, he's not necessarily liable for what happened here. So instead, the voluntary property damage coverage would go in and omit that discussion and give you your $25,000, $30,000, $50,000 to just get some stuff fixed and make the client happy again, What you would expect the insurance to do from the beginning, honestly. Moving on. Misconception number 3, the cheapest policy is the best policy. So in insurance, like we've discussed, it's so complicated that I see people not knowing what to shop for anything other than price. If insurance is so complicated, and if the first page looks the same from every carrier, then might as well start shopping price. There's nothing else to shop for besides price. And so this has turned into a heavy price-driven market. And the trick between the cheapest policy is the best policy is actually sometimes the cheapest policy is the best policy, and sometimes it's not. You have carriers, and you'll have a carrier that loves electrical contractors, and you have this other carrier that doesn't necessarily love electrical contractors. It might be cheaper to go get insurance with the carrier that loves to write electrical contractors. And they might have some specialized coverage options for electrical contractors because they deal with those guys so much. That they've seen specific claims that don't pay out through typical insurance, so they've added on some extra things that help boost up your gaps in coverage. And so understanding that there's so much more that goes into it, that if you're shopping from price alone, you're really getting no idea if you're getting the best policy, because you could buy the most expensive policy and it'd be complete garbage. You have these products that we access, in the industry we call it surplus lines, but what it really is just higher risk insurance. It would be where you would have to insure your adult gambling facilities, or if we have these game rooms all around town, you would be looking at surplus lines insurance for your gambling facility. And these policies are very expensive. They have very restricted coverage options, and so you would be thinking in your mind, oh, I bought the most expensive policy I could have possibly found, and really it's just garbage because they're charging you a lot of money because they assume that you're in some risky operation, you know. And so insurance is not determined by price. Coverage is not determined by, coverage quality is not determined by price, I guess is what I should say. No one knows what to look for. It's way too confusing. As soon as you start, if you're sitting in a meeting with your insurance agent, you do not have enough time to pour through the contracts and determine which one is better for you. Agents don't educate either. They also, back to the original point, that we have a ton of uneducated insurance agents that don't know what to look for when they're helping their client. You know, if I have a plumber in my office, I should be looking through the policy for specific exclusions that might apply to this plumber. And I should be mindful enough to have some knowledge on what might potentially happen to a plumber or an air conditioning repairman. That the AC might fall through the ceiling and it might not be his fault, and that might be a big mess. You miss that. What you see is agents just selling the policy, just selling the quickest policy they can get their hands on, you know, and that's a really bad position to be in. Specific carriers, moving on with the cheapest policy is the best. Specific carriers' contracts may suit you best. So just a minute ago we talked about the cosmetic damage exclusion, where we have metal buildings and insurers are saying, we're not going to pay any hail damage on this metal building until you show me where it's physically causing structural damage. It's causing leaks. It's causing this building to not function as a building anymore. Well, we have a couple of businesses that we insure. You know, mechanic shops are the worst about it, body shops, people like that, where all of their buildings are metal buildings, and some of them have 20, 30 metal buildings here in Lubbock, where the hail comes through and it's hitting all of their buildings. So I might have one carrier that offers insurance at one price and another that offers it for the same price even. One could have the cosmetic and one might not have the cosmetic damage exclusion. And depending on the client, it may or may not be a big deal. If you have clients with standard asphalt shingle roofs and standard vinyl siding, and those people, typically when the hail hits it, it knocks a chunk off of it and they call it structural, and they don't fight that as much as the metal buildings. So you have to be mindful what you're insuring and make sure that there's not a specific exclusion built in your policy that harms you specifically. Misconception 4 is that everyone pays the same. So this is also a very common misconception where we have clients call us and they want to insure something similar. I hate to call it an electrician business. If we have two electricians, so-and-so wants to insure his business, and he says, oh, well, my buddy Dave has an electrical company and he only pays this amount. And that's a super common question. Oh, so-and-so has a 2020 F350 and I do too, so we should be paying the same money to insure our 2020 F350. And it's just not the case. There are so many factors taken into consideration by insurers that there is no way that a single person could pay the same thing. Us living in the same geographical area, even just somebody living next door to you is not going to pay the same amount of money as you on insurance, because they're taking so many things into consideration, besides the things that I've listed here just being a few examples. Your business's location, coastal locations compared to like here in West Texas, you know, they obviously have a higher risk of coastal weather where we don't have necessarily that risk. Credit, obviously, it should be on there if it's not. Business size, though. Your business insurance is determined, the actual price of it. They set the base rating factor, and then they say, Dan, we're going to charge you this much money, and they take your gross receipts into consideration. They align that with your payroll. They align that with your number of employees and your insured property value. So if all of those things taken into consideration develop your overall rate for insurance. So if you're a plumber and you have 5 employees, or if you're a plumber and you have 5 employees that are getting paid $30,000 each, and then you have 5 employees that are getting paid $50,000 each. That guy that's paying his guys $50,000 will probably pay a little bit more on insurance. It's all about how much you're spending on payroll, how much you're spending, or how much you're earning gross receipts, not net profit after bills are. So all of the money coming in before any bills are paid, they want to know that number, and then they'll take in, obviously, how much they're insuring in property. Your claims history is a huge deal. We have clients that are squeaky clean, no claims. Those people deserve to pay less money for their insurance than a person that has 18 claims and they turn it in every year and they don't keep their vehicles put up, and every time a hailstorm comes out, insurance is sweeping up behind them. And that's a larger misconception than I think it should be. I have a ton of clients that say, well, I can't control the weather. I can't control the hail. Weather-related claims shouldn't affect my insurance cost. Well, you're right. You can't control the weather. You can't control the hail. But you can control how you mitigate your losses. And I have the same guy right here that put all of his stuff in a garage. And it looks like you might have pulled all your stuff out before the storm. So which person should we charge less for insurance? And very common that these people literally believe that no matter the hail claims, no matter the weather-related claims, they should be paying the same amount of money as insurance as the next guy. It's not true. Another thing that can play a huge factor in your cost of insurance is who you're working for, which is interesting. I don't know if anybody in this room right this second has a general contractor that they work for, or a home builder that they work for, or even a governing body that oversees your operations that wants to see verification of insurance in order for you to do business for them. That's the main reason why people even get business insurance in the beginning. They try to take on a job, and the job says, hey, we need to see proof of your insurance and all this other stuff, and they end up in my office trying to get this job, and they need to buy insurance. Who you're doing work for plays a huge role in how much you're spending on insurance, because different builders, different general contractors, different people overseeing your insurance are going to require different things out of you. Typically, the larger the job, the more stringent the insurance requirements. So they're going to require more out of you. The bigger the project, the bigger the job, the more frequent they're going to be needing you to work for them. Larger home builders start requiring crazy additional insured statuses out of our clients, which what that means is if you're a subcontractor, your general contractor will want to know that they have some insurance coverage from your insurance in case they get dragged into a lawsuit because of something you did. If you're an electrician on a project that a GC is overseeing and you do something silly, and the GC gets sued over it, he's going to try to get defense from your insurance over that deal. Larger the project, the more extreme those requirements get, the more heavily invested they want to be in your stuff. The more things that they require, like workers' comp. You might not have a job that requires workers' comp over here, but you do over here. All of these things add up and make it to where I have electricians paying $1,000 a year for insurance, and you have electricians paying $10,000 a year for insurance just because of the way that everything needs to be structured. And that's a real number. And in fact, the range should be from $1,000 a year to $100,000 a year that they're paying for insurance. And that's real life. You can mess this up enough or be doing well enough that your insurance can cost you $100,000 a year. That's a super common number for insurance policies to be $100,000 a year. They can also be $1,000 a year, which is the whole premise of my talk today, that you as the business owner have a lot of control over where you fit in that range. And by doing things early on, you can make sure that you stay always on the lower end of that scale. I just ran completely out of my notes. Let me get back on track. I think we're moving on. This last little bullet point. carriers might provide a more lenient contract. I talked about that kind of at the beginning, that you have carriers that kind of deviate from each other. You have kind of a similar insurance policy. Some carriers get different. One thing that we see is on commercial auto policies, we've seen some policies exclude drivers under 21 years old. Some carriers don't mess with that at all. So we had a specific situation where there was a large company that had a big fleet of commercial autos, and the owner let his daughter, who was 16 years old, drive one of the company trucks that day. You know, that maybe her truck was broke down or something, I have no idea. But she ran over a motorcyclist while she was going in that day. And so the dad, by letting his 16-year-old daughter drive that work truck that day, put himself at risk because he was sued. He put his business at risk because his business was sued. And the business was insured on a policy that excluded drivers under 21 years old. And so, as you can imagine, you have a motorcyclist who lived through the situation, which honestly was probably worse as far as the payout was concerned at the end of the day, that he lived through the ordeal. But and an unhappy family fleeing lawsuits everywhere, you know. And so you might have bought commercial auto insurance not even knowing that could potentially be a thing. You know, there's why would you know that you need to be looking out for drivers under 21 being excluded? You just bought the commercial auto insurance. 10 years later, you haven't been thinking about it. You've been hiring some 20-year-old employees, and you've set yourself up for a huge exposure. These policies that exclude drivers under 21 and these policies that don't exclude drivers under 21, you would expect them to be different in cost, which is why I put it in this slide that everyone pays the same, because you could have virtually the same commercial auto policy and deep in the contract, one's excluding under 21 and one's not excluding under 21. Should be totally different in cost. You'll never see that on the first page. It's never going to spell that out for you and say, by the way, warning, 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 red letters, red letters. No. It's tiny, and it's way in there, you know, and it's hard to find. So nobody should pay the same on insurance. If you're paying the same, something's wrong. It's the same cost as somebody else's, something's weird. I wanted to add in a slide also. I don't know if we have any home-based businesses, but just a little touching point of how homeowners insurance reacts to home-based businesses. Because this is the Small Business Summit, I assume that we should have groups of people starting up new businesses coming to this thing. So I assume that some people might take the opportunity, little craftsmen or things like that. They might want to do their work out of their garage. And what does that set you up for? You know, so homeowners insurance typically does not cover business-related liabilities or property. So you would assume that. My homeowners insurance is probably not business insurance. It's probably not going to cover my business. Yes?
How easy is it for a homeowners company to decide that you're in business?
It's pretty hard. So that's actually, I see where you're going with that. One of the points is that people insure, they have their homeowners insurance and they have their business inside their home. Let's say the home burns down. Adjuster comes out, looks at the home. He might pay that claim because he might not know there's a business in the house. You could get away with it. There's situations, what's up?
I'm sorry. I'm going to correct you. The exclusion applies to other structures. The property damage exclusion applies to other structures.
Right, that is true. That is
But
true.
the home itself, go figure. We're not going to exclude coverage to your home itself for property damage. And the liability portion is, the problem you run into with liability is homeowners doesn't offer liability coverage, bodily injury property damage to others for acting in business when you're conducting business. And the definition of business by homeowners is really broad. It's terribly easy for a homeowner's company. If you're just selling some trinkets, if you're doing some needlepoint, selling some little things out of there with your needlepoint, that can be determined real quickly to be business activity. It's really easy. They say that you must expect a profit, but it doesn't mean that you have to make a profit. If you're earning a little bit of money, but you're not making a profit, it can still be business. And so you have to be really freaking careful about ending up in the definition of business whenever you're doing these home-based business projects.
And if I go in order, then I'll stop getting off track, but he is right. The other structures, which we'll talk about in the next bullet point, if you were operating your business inside your home, your home burned down, your home would be covered. But my point is that your business property and your business liabilities are not covered inside your home. So if you have business property inside your home and your business property is looking for coverage, then those things will not be getting coverage. If you are operating a business out of your outbuilding, or if you have an apartment in your outbuilding, in the loft of your outbuilding, those exclude the entire building. If you have business operating in your back shop, if you have somebody living in your back shop is excluded. But that's what I was trying to roll into a minute ago. These adjusters go out on these claims, and these claims get paid all the time. Just because, and it also causes confusing perspectives in insurance, because you have people operating businesses out of their back shops. You have people living out of people's back shops, and the building burns down, and one time they got paid. And it takes an instance for the adjuster to actually have to figure it out. You know, they have to see something. They have to come across something that sparks their mind and says, oh, hey, there's some kind of business activity going on here. We're obviously not going to cover this building. So home-based businesses, you should definitely talk to your homeowner's insurance. You should see what all they have available to add on. Some homeowners policies will tack on some liability coverages for a very narrow list of class codes. So you have, they're not going to give you business liability for your oil fracking company, but maybe for your if you're a hairdresser and you have people come over, maybe you could find a hairdresser classification for your home-based insurance, but never anything that's super risky or heavy involved in, like, oh gosh, off-premises work. It's all going to be on-premises work that they're kind of covering classifications for. Accountants, I bet you could get an accountant classification if she's like a home-based accountant. That's probably something. Yep. Not all homeowners policies will provide this. You should buy business insurance and list your home as the resident, or as the location that you conduct business, and you can still do this, and you'll have to have two policies. You'll have to have a homeowner's policy, and you'll have to have a business owner's policy.
And just if you're the business and you're working out of your home, your business policy will say that you are a tenant
Right.
of the house.
Right.
You are not the owner of the house.
Right.
You are renting a room in the house from your house.
True. Anything else about the home business stuff before we move on to the next misconception? The next one that I have here is that small businesses don't need insurance, which should be an easy one to rationalize. I have had people claim, well, I don't know, I'm just starting, I'm just doing this. Small businesses typically don't have the reserve capital for mistakes being made. So if you're out just starting, typically people want to be inherently good, and if you actually did damage somebody's property, as a business owner, you would probably want to fix it. You don't want your reputation to be slandered. You want to uphold a good business standing, and you want to keep people's property like it was when you started working on it. So we'll have newer companies that don't want to buy insurance. When you're new is when mistakes happen. It's when you start learning the things that actually set the professionals apart from the newbies. And so, being a newer business, it would be very important to have the things like voluntary property damage that we had at the very beginning. And these smaller sublimits are going to be almost like savings accounts to you early on for these small claims that you might have over the course of starting your business. Also, by buying insurance early on in the process, you're giving yourself the opportunity to access more jobs. So like we talked about a couple slides ago, you have general contractors that are going to be requiring insurance from you. You have organizations that oversee your industry that are going to require insurance from you. And the insurance that they require, if you already have it, you're early on in the process, you're going to go ahead and get your name in the door on some of these jobs. You're going to be put on the bid list where you might not otherwise would, or where your buddy might not otherwise would because he doesn't have insurance. Subcontractors working for contractors, body shops, mechanics, municipalities and large fleets, all of these people gain access to larger contracts whenever they have insurance. Insurance options for small businesses are also super reasonable. Minimum premiums for common classes of insurance, like the bare minimum, if you're just the tiniest business, it doesn't even blip on their radar yet where they start charging you additional premium. The base rate factors are like $500 for business owners policies, $1,000 for business owners policies. And that's a great place to start. And it doesn't burn a hole in your pocket. Most businesses should be able to, it's per year, $1,000 per year, $500 per year. It's not the worst thing in the world, and it can save you and put you in the position to be in front of more work.
I like to say, if you have a business and you can't afford a $500 a year insurance policy, it's not a business, it's a hobby.
That's true. That's very true. Very, very true. Because that is what it is. I mean, you probably see it all the time. These, run-of-the-mill operations. Not saying, going back to the oil and gas fracking operation. His minimum premium is probably not $500, but your run-of-the-mill, very vanilla classifications, fence builders. That could be a $500 class. Moving on to workers' comp being required, which is pretty popular opinion that workers' comp is required. And that is true in some states. You are required as a business owner to have workers' compensation insurance. Texas is not one of those states. By not carrying workers' comp insurance in Texas, this is the shock to people, but if you do not carry workers' compensation, you are forfeiting your rights to common law defenses. So if you have an employee, a good example, you have an employee, you work in some kind of metal fabrication style job, and you have somebody with a metal grinder, and they've removed all of the guards off of their metal grinder, and they're grinding metal, and boom, the disc explodes, and they've got, their face has been impaled by this grinding disc. It's the employee's fault partially for taking the guard off the grinder, correct? If you as the employer have provided the guard, provided the safety equipment, done all of these things, the employee fails to use it, he hurts himself, you should be able to go to court and defend yourself against that so that you don't owe all of that money. So if you do not have workers' comp in Texas, not only do you not have the coverage to defend yourself, but in the court of law, you are going to be deemed automatically negligent for something that you were not negligent for. You're going to be on the hook for their medical bills, even though it was their dumb doing that caused them to be in that situation in the first place. Whereas having workers' comp puts you in a situation where you can actually go to court, actually stand your ground, actually fight your stance. If you're doing the right thing as a business owner, then you should have proper safeguards in place so that really no employee should be able to come after you unless it's some freak crazy accident, So workers' compensation is not required. That's true. You should have it. It's very important. Another question that we get asked, and we've started selling more and more, is, well, what if I don't have any employees? Do I need workers' comp? And the answer is sometimes. There's a product that you can buy called certificate-only workers' comp. Have you heard of certificate-only workers' comp? Workers' comp for no employees. It's real cheap. And what it does is, if you have a job, like I was talking about before, if you have a general contractor that says, you must have workers' comp, I can sell you a workers' comp policy that basically just writes it on the form so that you can turn it into your general contractor and he'll be happy because you obviously don't have any employees. You could exclude yourself as a business owner, which is a cool portion of workers' comp that you as a business owner can be included if you want to and receive benefits. If you're the business owner but you're also the electrician, you probably want some workers' comp too. It's probably not the whole end of the world. You probably don't have the best health insurance if you're a business owner. Most business owners don't have the best health insurance. I know I don't have the most amazing health insurance. And so workers' comp is important to have. It's also not expensive. Rates on workers' comp have come way down. Where the whole insurance industry is coming up, workers' comp is actually settling down a little bit. More carriers are wanting to offer it, whereas we were very limited on options for workers' comp. I would say that most carriers offer it now as a part of their packages. Workers' comp, good. I definitely recommend. Misconception 8 is a really good one. It shifts gears a little bit because now we're talking about insuring property. So you're a business owner and you have a building. When people call us to insure a building, you obviously have to determine a value that you're going to insure that building for. You insure your house for X amount of dollars. You insure your commercial building for X amount of dollars. How that value is determined is a misconception in the insurance industry. So most people, when they buy a building, let's say somebody got a really good deal. You have a $500,000 building that John Doe bought for $250,000. And the first thing that John Doe is going to do is come to my office or Dan's office, and they're going to want to insure that building for $250,000. And in your mind, you probably feel like you should be able to do that. But when you tell your insurance company, when you tell me, I want to insure my building for $250,000, what we're doing is we're actually saying that $250,000 is now the replacement cost value. That's what it would take to go and rebuild the building back new if it disappeared tomorrow. So they're charging you insurance based on a $250,000 replacement cost building. So let's say you're running with that policy. $250,000, it's a $500,000 building, you got an awesome deal, you got $250K on insurance so that you can get your money back if anything bad happens. Well, 2 months later, hailstorm comes through Lubbock and wipes out the roof, right? And you've got this building insured for $250,000. Well, a roof is going to be much less than $250,000, right? We're okay. So you go in, you turn your claim in on your insurance, adjuster comes out, and he looks at this building, and he goes, this is a $500,000 building, and it's insured for $250,000. It looks like we insure half of this building. So he's going to stroke you a check for what half of a roof costs because you're insuring half of your building. You don't get to use that $250,000 limit. That's not your backbone. You're insuring a $250,000 building, and it turned out it was a $500,000 building, so that means you were insuring half of your building. That means they're going to pay you for half of a roof.
Minus the deductible.
Minus the deductible, yeah. You still pay the deductible. Still pay the deductible. So, super common that we get in debates over insurance. And typically it happens when we make it to the quote part. So somebody calls and they say, hey, I've just bought this building or I've just bought this property and I need insurance on it. And I say, okay, and then that's pretty much where we leave it. We kind of go from there and start researching the building, seeing what kind of build features we can find about it. And while we're going through that process, we're using valuation tools that we have access to as agents that roughly tell us how much it should cost to rebuild that building if it disappeared tomorrow. Because in a replacement, and there are multiple types of insurance, there's not just replacement cost, but for the sake of being simple, replacement cost insurance, they want you to insure the building for what it takes to rebuild if it disappeared in today's value. So you could have a 1950 year model building and you need to be insuring it for what it would cost to rebuild it in 2024. You know, it's not about what it cost to build it in 1950. It's about what it would cost to do it again in 2024. And people that want to insure their buildings for less, if they got a good deal on it, they commonly don't realize that they're shooting themselves in the foot on partial claims as well as total losses. That's one thing that people don't understand. My policy says that I had $250,000 in coverage. Why are they chopping my hail claim in half? Well, it's because you're underinsured on your total value. They were only charging you like you insured a $250,000 building. So they're going to also pay small claims like they're paying on a $250,000 building. Otherwise, they would have been charging you like you had a $500,000 building. You know, so it's not fair to the insurance company at that point. Valuations get people in arrears all the time. That process, when we go back, after we've been using our valuation tools, when we go back to the client, we say, hey, John Doe, we have your quote done. This is what it's looking like. This is what we have the building insured for. It's always, oh my goodness, you know, what? Yeah, I do not need that much money for, you know, I would never, it would not take me that, oh, I can build it myself for much cheaper than that. And they don't care what you can build it for yourself. They care what it would cost them, because they're going to be the one paying the bill. You may not even be in charge over the contractor, so you don't even have the job to go cut the insurance company a better deal. You know, they don't care that you can do it for a better deal, because they're going to be the ones floating the ship when claim time happens. So they need to make sure that if they're on the hook for the bill, that they've been charging the proper premium in order to pay the full claim. And so I hope that makes sense. That's a super big concept to understand. And if you have something to add, go for it.
We not only battle customers over building valuations, a lot of times those battles are caused by bankers. I wish the banking people were in this room having this conversation with us.
They don't understand.
They will tell you, all I need is how much this loan is for.
Yes.
Insurance companies do not. It doesn't apply. It's not that they don't care. It's just, it doesn't apply. We're talking construction costs, not loan value, not market value, not your good deal value.
It's almost a sales technique, honestly. What the bank is doing at that point is trying to make you feel like it's all going to be okay when you go out there to insure it on your own. But the fact of the matter is, yeah, they can tell you we only need it insured for this much money, and there's no amount of screaming you can do with your insurance agent to make that right. You know, you need to be insuring it for either the replacement cost value or the actual cash value, which is a whole different conversation, neither of which are what you bought it for or what it cost way back in the day. None of those things. If you're looking at the value, it might be a weird number, and that's because it might cost more to build your building than you bought it for or something like that. So I hope that makes sense. That's a great point to use in your homeowner's insurance, even on the personal line, since we're, you know, a small group here. Take that with you when you buy homeowner's insurance. You might buy a $250,000 home, and you might need to insure it for $350,000 so that you get all your roof paid for if something bad happens. You don't want to get co-insurance penaltied out on your partial claims. That would be the worst thing if half of your house burnt down and then they only paid half of the half. You know, that would be a bad deal.
And think about the scenario. I lost my train of thought.
Go ahead.
Yeah. Sorry.
No, if you come back up with it, tell me. So, insurance to value, super important. Determining value, where is insurance coming up with my value?
About the insurance to value. One of the things that you may not realize is those estimators also take into account what would happen if a tornado came through and wiped out 50 houses, and all of those materials have to be bought at the same time to do all.
Yes, that's a great point. That's a great point. Yeah, because if there's a natural disaster, contractors are going to charge more, materials are going to cost more, all of these things are good. And that happens. That's a super common thing that goes on in insurance. We're seeing it in Ruidoso right now. You know, it's been a crazy claim season in Ruidoso this year, but most people aren't rebuilding, though, in Ruidoso. We're not really seeing any rebuilding going on yet. Just a lot of... Importance of proper coverage. So this actually kind of shifts gears, and I'm getting close on time. Isn't it what's my slot, 3:30? Is this it? Okay. We'll kind of try to wrap it up. Let me see what we'll try to run through these real quick. So obviously, proper coverage is important. You want to protect your assets. You want to protect your property. You want to protect them from legal attacks. You want to protect them from physical attacks, meaning weather, vandalism, things like that. Lawsuits being the legal attacks. Insurance is important to have proper coverage because it will get you into those big jobs. You will have your big jobs looking at you saying, this guy doesn't have the proper coverage. You need to go back and change this and change that. And then also, of course, peace of mind. Having the proper coverage should, of course, give you peace of mind. Real quick, I want to go through some of these things that we see setting your business up for success. So we have a huge problem with people taking their businesses and say you're an electrician and your wife is a beautician and y'all have one LLC and you run the electrician company under the LLC, you run the beautician company under the LLC, different DBAs, and you want insurance. In these situations where you mix your entities is really what it's called, but where you are so far away from the industry that you're dealing with, maybe neither of them are hard to insure, but you'll still have insurers that will not meet in the middle. They do not want to mix the risk. They don't want the higher possibility of risk. They don't want the mix. They also have special coverages tailored for service industries than somebody like a beautician or something like that. For contractors, they have specific coverages. Mixing these entities is no good. You will have less options for insurance. You will have less carriers that want to take you. If you have a beauty shop, start an LLC and insure the beauty shop. And if you have a plumbing operation, then start an LLC and insure the plumbing operation. And if the plumbing operation starts deciding that it's going to do a little bit of electrical work as well, that might be okay. It might be okay. But you need to talk to your agent. You need to make sure you're having these conversations. You can't just be doing fracking, auto repair, and a restaurant all under the same LLC on one policy. Will not work. They will not do it. Property locations and build features. Don't buy old junk that hasn't been remodeled. Don't buy in remote areas where there's no fire department close by. These are ways to make sure that if you're going into business, you're going to have the best opportunity for cheap insurance. Properties located in rural areas are often charged more for insurance, or you just can't find it at all. You won't be able to get the property insurance in 2024. Some classes also cause issues. The fracking guy is harder to insure than the electrician is. Depending on the risk, you're going to have different difficulty levels attaining the coverage. So by separating the entities, keeping the fracking business over here on its own, make it difficult. Well, the beautician shop on its own LLC is easy. So now we're not mixing. We have one that's easy and one that's notably pretty hard to work with. No mixing titles. If you own it personally, use it personally. If you own it in the business, use it in the business. There are ways to cover your personal auto on your business auto policy, of course, but it is a great idea to keep your titles straight. If you use it in the business, put it in the business name. If you use it personally, personal use. Don't buy your business building under your personal name. And then some company vehicles are personally owned, some are company owned.
Farms are the worst.
They are, because they probably don't have many LLCs going on in the farm operations at all.
They've got 18 entities, but everything's commingled.
Yeah. Separate entities for separate classes. Some things can be mixed, others cannot. I already talked about this. Some classes cause issue. So depending on the scope of work, I've discussed this. Your fracker is going to have a harder time finding insurance than your retail space. Your people selling antiques. Your antique store will have a much easier time than your fracker. If you're a new company starting operations, Don't do weird stuff in the baby beginning. Run a more vanilla operation at first. If you're an electrician, don't try to rewrite the book of how electricians operate in your first 3 years of business. Get some experience behind you, and then maybe start moving into the more odd behaviors. But you want to be as vanilla as possible coming in so that you can be rated properly. When we classify businesses, if you come to me and say, I'm a plumber, it's very easy for me to go, plumber. And the insurance carriers know what a plumber is. We both agree as to what that means. But if you have a special operation, you might move over into a not otherwise classified class. So we have no other way to classify. Who should pay more in insurance? The person where we know exactly what's going on, or the person that we kind of have them not otherwise classified? Like, we just kind of charge them a rate, whereas we know where this guy does. You know what I mean? So don't find yourself in a not otherwise classified situation. You want to be easy to identify to insurers if you want cheap insurance. Sometimes it's just the nature of it, but if you have an odd operation, you're going to want to at least get a couple years of experience before you start moving into that odd operation.
A prime example there too is, you talked about underwriters getting tighter and tighter.
Sure.
Harder to underwrite stuff, right?
Sure.
Guess what they look at? Your website and your Facebook page.
Goodness.
You're in the Facebook, you're in the website world, you're going, oh, I want to tell people how I do this.
Yes. Oh my gosh.
5 of those risks that you just listed on your website that you probably never do,
Right.
just cost you a ton of money.
It did. And the mechanics. Let us work on your airplane. Oh my gosh. How many airplanes are you working on? Oh gosh, what's another one? Help me, Dan, John, somebody say something where people do crazy stuff. I'm a computer repair guy, but also, then they'll add something. They'll just blow it up. But that's my presentation. I really did come up against my time, y'all. And if y'all have any Q&A, we can go over it real quick, but I really appreciate your attention and focus during this session and having me out. Yeah, appreciate you.